Hey traders, Stephen Kowitzel here with tradesplan.com. It is Friday. What day is it? July the 1st. Okay, so we're going to look at the overall market and then we're going to look at some ETFs, the top ETFs of the week, which ones are performing, which ones are holding up. So let's start with the S&P 500 ETF SPY. Really looking at this, this looks like an ugly chart just about any way you slice and dice it. Constant, you got one leg, two leg, it's in the third leg. Is this the bottom of the third leg? We don't know. So I'm not trying to get overly excited about anything. It moved above the 20 last Friday, and then it just got kind of slammed back below it. So at this point in time, we really have to assume any of these little rallies will fail. So, but when you get, some kind of signal, maybe the market moves above the 20 or something like that, then you can stick your toe in the water with a very small half position. If that works and it continues to go up, then you can continue to build in. But right now you are playing defense, or at least you should be. So that way you can keep yourself out of trouble and survive this type of market. Now, let's look at the top ETFs of the week. There's not a lot of good looking stuff in here. The charts look really, really ugly. So what I decided to focus on today is some ETFs that are above their 50-day moving average. The 50-day moving average is the orange line, as you can see right here. There's not a lot above the 50-day moving average. So you are right here where it depends on where you want to draw it, but you have this carbon ETF, KRBN, that tracks the global carbon index. This is looking interesting right here because you can see really since February, I'm paying attention to this relative strength line. Now this line right here, this is just relative to the S&P 500. So that means it is outperforming the S&P 500. Now, it can still go down and this line go up. What that means is if this is going down and this line is going up, it just means it's going down less than the market. Okay? So this is looking interesting right here because, there's been a lot of talks, Supreme Court on the carbon emissions. So this is starting to perk up a little bit. So you could say, okay, this needs a definitive breakout above 50. You can kind of see a lot of these pivots right here. That might be a safer place to enter. But I definitely think this is something that can buck the trend or hang in there. Right there, you can probably put a stop loss, kind of put an entry above here. You could probably, raise the stop loss. But this right here is looking interesting. You have a horizontal potential breakout. You have a downtrend breakout. You have a relative strength line that is rising since February, and it's back above the 50-day moving average. So that is definitely one to put on your watch list. Another one I keep talking about, and it just really hasn't quite taken off, is tan solar stocks. And the reason why I keep talking about it is because the relative strength line has been rising for the last 60 days. You can see right here. And if you want to get really technical, really since March, you can kind of see it's really been outperforming the market, even though the chart still looks pretty ugly. So it is above the 50-day moving average, which is the orange line. So I would say a relative breakout above this 78.82 pivot would be a nice entry. It did sell off a couple days earlier this week, but so did the market. So at the end of the day, they're all stocks. The market's going to drag them back down, but this is something that's been showing relative strength, and is above the 50-day moving average. Another one that has really been only showing relative strength in the last month is Biotechs, and that's XBI. You can see that right there. Now, all these, let's look at the weekly chart. This peaked way back in early 2021. It has been disastrous for Biotechs. Now, one would argue they shouldn't have been up here in the first place, right, due to valuation. So you can see all these little, move above the 50-day moving average. They're failing. They've been failing for a while. One of them is eventually going to work. So, you don't want to buy just the break, but this is kind of looking interesting, but I would definitely be interested if it breaks out above last week's high. All right, if the market starts to rally, anything I say, I want to complement it with if the market starts to rally, because if this has a good one day and the market's really selling off, I wouldn't touch anything because eventually the market's going to drag it back down. Okay, I want to, flow with the tide. So right here, we're looking at this. And if the market starts to rally and this breaks out, I really think you could easily get up into the 97 area if we get a strong rally. So kind of right in here, which would probably be the next level of resistance. You got resistance at, this pivot, the 200-day moving average. That would be our target. So not a bad one to watch with any of these. If they roll over today, which they could, I send videos out, and if they roll over that day or the next day, just forget about it. Get rid of it, move it off your watch list, and then move on. So TAN, KBI, carbon, lithium battery is also one. I mean, look at that relative strength line that's screaming. It's above the 50-day moving average. It is in a consolidation mode. I would be interested if it really kind of moves back above 80. And I understand that's a ways away, right? You're looking at, a 10% rise. So, but, this is looking interesting. You have a inverse head and shoulders pattern. You have right there, you have a neckline. The neckline is right at the 200-day moving average. You have a rising relative strength line. There are some things to like here. And I have said this before, and I've been saying this for several months. I believe that when the market does get some wind behind its back, that the way clean energy has been holding up relative, right? They've still been chopping around, but they've been holding up relative to the S&P 500 a little better. I think this is the industry that they could make a major move. So one other thing I do want to show you, even though I have to address it, I'm not going to recommend it. China is starting to move. Now you got a China ETF right here. You got a China ETF right here, and they're in the top 10. Now, the reason why I'm not big on Chinese ETFs is because there's so much, there is upside, but man, 9 times out of 10, like when you get involved in a China stock or a China ETF, they just get, China does something and it just gets slammed. So I actually stopped trading Chinese stocks and ETFs over a year or two ago because I was really tired of someone just making one announcement and then boom, everything blows, right? So it's just, full disclosure there. I do not trade China ETFs anymore, but they are moving and they have been leading for a few weeks now. So you do have to acknowledge that. But I personally, this is more of a personal opinion. I think that the risk sometimes just doesn't outweigh the reward. So I hope this was helpful. Have a nice long 4th of July weekend, and we will see you next week.